Okay, ready to dive in with me on this one? We're looking at the crypto world today, and, well, things are a little, well, interesting. That's one word for it.
Yeah, definitely interesting.
You've probably seen the headlines, crypto bloodbath, Bitcoin takes a hit. But here's the thing.
Mhm.
This downturn, it's happening at the same time as some pretty positive news, especially when it comes to Bitcoin. It's kind of head-scratcher.
Yeah, it really is. It's like you'd think good news would boost the market, but we're seeing the complete opposite.
Exactly. And to make it even more puzzling, President Trump just made good on a big promise that Bitcoin strategic reserve. You'd think that would send prices sky high, but instead we see, well, a dip.
Yeah, it really shows how complex things are, when it comes to crypto prices. You can't always just say good news equals price jump.
So we're going to try to untangle all of this today. Our main source for this deep dive is a recent episode of the Blockchain DFB podcast. The host, well, he's pretty much echoing what everyone's feeling, complete bewilderment. He's seeing red everywhere, global crypto market cap down to 2.72 trillion, Bitcoin down to 82,430. He even talks about, Bitcoin whales,
Right.
maybe manipulating the market.
Yeah, it's definitely a possibility. Those big holders, they can definitely move the needle, when they make trades. But to say that they're behind this whole downturn, that might be a bit too simplistic. There might be other things going on. Like, what about the media? Even if they're not always accurate, they can have a huge impact on how the market moves.
I see what you mean. It's like that fear and uncertainty. It spreads faster than actual information sometimes.
Yeah.
And speaking of media, the host of the podcast, he had this, well, pretty interesting theory that the mainstream media, they might be talking down Bitcoin, spreading negative news, while secretly buying it up themselves.
Yeah, that's a really interesting thought, and it kind of speaks to a bigger issue, who controls the information and, well, potential conflicts of interest. If these big players are spinning the story about Bitcoin just to make a profit, then, well, it raises some serious questions about how transparent and fair the market really is.
It really does make you wonder who's pulling the strings. But before we go full conspiracy theory, let's take a step back and, well, look at the health of the crypto market overall. The host pointed to some signs that maybe things aren't so rosy, particularly the declining volume in DeFi and the decreasing TVL.
Yeah, those are really important things to look at. DeFi, for anyone who's not familiar, basically refers to financial applications built on blockchain. The idea is to create a more open financial system. So volume and TVL, they're basically measures of how much activity and investment there is in the DeFi space. And if those are going down, it could mean that confidence in DeFi protocols is waning, or maybe investors are shifting their focus.
So, not a great picture for DeFi right now. Okay, let's shift gears back to the big news, President Trump fulfilling his promises. Releasing Ross Ulbricht, removing Gary Gensler from the SEC, and of course, setting up that Bitcoin strategic reserve. A lot to unpack there.
For sure. Each of these actions is significant and has implications. But focusing on the strategic reserve, the executive order, it outlines how it's going to be managed and what it's meant to achieve. One thing that's particularly interesting is that the Bitcoin in this reserve, it won't be sold on the open market. It's going to be used for specific government objectives.
So that raises the question, what are those objectives? And why is the government holding on to Bitcoin in the first place? It seems like a pretty big shift from, traditional economic policy.
It is, and it shows that more and more people are recognizing the potential role of Bitcoin in the global financial system. Some people think the government sees Bitcoin as a hedge against inflation, especially since its supply is limited. Others believe it could be a strategic asset in international transactions, an alternative to systems like SWIFT. There's even talk about using it for cybersecurity. And it's really important to remember the strategic reserve, it's different from that digital asset stockpile mentioned in the executive order. The stockpile seems to be for digital assets that have been seized, not specifically Bitcoin.
That's right. The Blockchain DXB host, he made that distinction. And he also said we should all keep an eye on that 60-day deadline for the Treasury Department's evaluation of these reserves. He thinks that date could be a trigger for some big market movements.
Yeah, that 60-day mark will be crucial. The Treasury's findings could give us some insight into what the government's long-term strategy is for these assets, and that could influence how investors behave. But thinking more broadly, it's important to consider what it means that the U.S. government is holding Bitcoin at all. Does this mean they're accepting cryptocurrencies more? Does it threaten the decentralized nature of Bitcoin? These are questions we'll have to grapple with as this all plays out.
It's definitely a lot to take in. But it's also pretty fascinating to see how governments are responding to this rise of cryptocurrencies. Speaking of government involvement, let's talk about that crypto summit that happened over the weekend. One of the big things that came out of it was the decision to allow U.S. banks to get involved in certain crypto activities without needing specific regulatory permissions. Seems like a pretty big step towards mainstream adoption, don't you think?
Yeah, it definitely could be. Basically, it makes it easier for traditional financial institutions to get into the crypto space. And this could mean that more banks will offer crypto services to their customers, which could expose a lot more people to Bitcoin and other cryptocurrencies.
It's almost like we're watching crypto slowly become part of the existing financial system. At the summit, Michael Saylor, the big Bitcoin advocate, he had this bold proposal. He said the U.S. government should acquire 20% of all the Bitcoin out there over the next decade. Now, that's a huge statement.
Oh, yeah, no doubt about it. That's a bold proposal, and it's definitely going to stir up a lot of debate. It's probably not going to happen overnight, but it's worth thinking about what would happen if it did. Would it drive up the price of Bitcoin? Would it give the U.S. government too much power in the crypto world? These are big, complicated questions with no easy answers.
And it's not just the U.S. making moves in the crypto world. The Blockchain DXB host, he mentioned that South Korea is thinking about creating their own Bitcoin reserve, plus a stablecoin backed by their currency. They're basically following the U.S.'s lead.
Looks like the U.S. might be setting a trend here. If more countries start doing the same thing, it could change the whole crypto landscape. What will this mean for Bitcoin being accepted globally as a real asset class? How will it affect the development of CBDCs? These are trends we'll need to keep a close eye on.
Absolutely. And speaking of trends, we're seeing more and more banks getting into the crypto game. BBVA in Spain, Emirates NBD in Dubai, just a couple of examples. Crypto seems to be making its way into mainstream finance, slowly but surely.
It is. And this brings up the question of finding the right balance between accessibility and control. Is this just a natural step towards mainstream adoption? Or does it mean that we're moving away from the decentralized principles that Bitcoin was built on?
It's a valid concern. On the one hand, easier access could mean more people using crypto and being included financially. But on the other hand, if the big financial institutions become the gatekeepers of crypto, it could really undermine that original vision of a decentralized financial system.
It's a tricky issue with no easy answers. It really highlights the need for ongoing discussion and critical analysis as the crypto world keeps changing. But speaking of new developments, let's talk about this company called Serenity and their new product, the Success Card.
Yeah, the world's first biometrically secured blockchain card. Sounds pretty futuristic. But if I'm honest, I kind of share the podcast host's skepticism. Biometric wallet authentication, a secure digital repository for seed phrases. It all sounds impressive, but I'm not really sure what it means in practice.
Let's break it down. A seed phrase, for those who don't know, is basically a set of words that gives you access to your crypto wallet. If you lose your seed phrase, you lose access to your money. Serenity says the Success Card is a more secure way to store this super important information.
So instead of writing your seed phrase down or saving it in a digital file, which can be lost or stolen, it's stored on the card itself, protected by biometric security. Okay, that makes sense. But what exactly does biometric wallet authentication mean?
So it means using your unique biological traits, like your fingerprint or iris scan, to prove who you are and unlock your wallet. Kind of like how you unlock your smartphone.
Okay, so it's more convenient than remembering passwords or PDNs. But is it really secure? What if you lose the card or someone steals it?
Well, Serenity claims that even if someone gets their hands on the card, they won't be able to access the wallet or the seed phrase because of the biometric security features. They even say it has a feature to remotely disable the card if it's lost.
Okay, that's reassuring. But I still have some worries. What if the card gets damaged or stops working? Can you still recover the seed phrase, get your money back?
That's a really important question, and Serenity needs to be transparent about how they handle that. They say their technology makes sure you don't lose your data even if the card gets damaged or malfunctions, but they haven't really explained how that works.
It feels like you have to really trust them, trusting your whole digital identity and all your crypto to this card. But let's say we put the security concerns aside for a second. I'm still not clear on what Serenity means by real-world services and decentralized physical infrastructure networks. They use a lot of buzzwords, but what do they actually mean in practice?
You're right. We need to take a closer look at those phrases. It seems like Serenity is trying to bridge the gap between the digital world and the real world, using the Success Card as the key. They imagine a future where you can use this card to access all sorts of blockchain-based services in the real world, not just for financial transactions.
Okay, but can you give me some examples? What kind of real-world services are we talking about?
Well, they mention things like verifying your identity, validating files, secure payments, and updating credentials. Imagine using your Access card to prove who you are at a bank, access your medical records at a hospital, or even vote in an election.
Wow, that sounds like something out of a science fiction movie.
Oh.
But are any of these services actually available now?
Not yet. These are just examples of what Serenity hopes to achieve in the future. Their technology is still being developed, and they're still working on building partnerships.
So it's more of a vision than a reality at this point.
Yeah, but that doesn't mean it's not a vision worth exploring. The idea of using blockchain technology for real-world services has a lot of potential.
I can see that. It could make things more efficient, enhance security, and maybe even eliminate the need for middlemen in many transactions. But there are challenges too, right? Creating a decentralized network of real-world services that people actually use and trust is a big task.
Definitely. It requires collaboration, making different systems work together, and having a really strong infrastructure. And of course, people actually need to want to use these new technologies and feel confident that their data and privacy are protected.
It's a tall order, for sure, but if they can make it happen, it could really change our lives. Okay, let's not get too ahead of ourselves with all these future possibilities. We still have a lot to talk about in this deep dive, including Serenity's idea of decentralized physical infrastructure networks.
Yes, we do, and it's a really fascinating topic. But maybe we should save that for the next part of our deep dive. We've covered a lot already, and I think it's good to give our listeners some time to think about all of this and form their own opinions.
You're right. There's a lot to process here. But before we take a break, I want to bring up one more point from the Blockchain DXB podcast that really resonated with me. He talked about the potential for media manipulation and how important critical thinking is in the crypto space.
Oh yeah, that's such an important point. It's easy to get caught up in the hype and the headlines, especially in a field like crypto that's moving so fast. But it's crucial to question the information we're being given, to consider different points of view, and to come to our own conclusions.
Absolutely. And that's what we're all about here on the Deep Dive. Encouraging critical thinking, exploring different perspectives, and helping our listeners make sense of the complex world of crypto.
We're not here to tell you what to think, but to help you think for yourself. We want to provide context and analysis and empower you to make your own informed decisions.
Couldn't have said it better myself. All right, we'll pause here for now. Join us in the next part of our deep dive as we continue to explore these fascinating developments and try to make sense of the ever-changing world of crypto.
Yeah, it's tough, especially now when there's so much information out there. We're constantly being hit with news, opinions, analyses, you name it. It takes real effort to figure out what's real and what's not, to separate the important stuff from all the noise.
You're so right. We need to learn how to filter all of that, to think critically and not just believe everything we see or hear. But sometimes it's like, where do you even start? Take this whole thing with the Bitcoin Strategic Reserve, for example. It's such a big change from the way things have always been done in economics.
Yeah.
I'm honestly having trouble understanding why the government would do this.
Yeah, it's a huge shift, and it's definitely causing a lot of discussion. I think it helps to look at it as part of this bigger picture, with everything that's going on in the global economy and geopolitics. More and more people are starting to see the problems with the current financial system, especially with inflation going up and all the instability in the world. So governments are looking for other ways to protect their assets and make sure their economies stay stable.
So are you saying that Bitcoin, because it's limited and decentralized, is starting to look good to governments as a way to protect themselves against all that uncertainty?
Exactly. It's a way to diversify their holdings, potentially reduce the risks from inflation, and maybe even gain a strategic edge in this changing global financial landscape. It's not a coincidence that other countries like South Korea are thinking about setting up their own Bitcoin reserves, too.
It makes sense. Kind of like a domino effect, One big player makes a move and others follow. But doesn't this raise concerns about governments controlling Bitcoin? I mean, if they start buying up lots of Bitcoin, couldn't they control the price or even try to control how it's used?
That's a valid point. One of the main things that has always made Bitcoin attractive is that it's decentralized. If governments start having too much influence over the Bitcoin network, it could really undermine that fundamental principle. It's a delicate balance, encouraging adoption while also protecting the very things that make Bitcoin unique.
Yeah, it's like walking a tightrope. And it's not just governments we have to think about. Traditional financial institutions like banks, they're getting more involved in crypto too. This decision to let U.S. banks engage in some crypto activities without needing special regulatory approval, that feels like a big turning point.
Absolutely. It basically makes it easier for those traditional institutions to enter the crypto space. And this could lead to more widespread adoption as banks start offering crypto services to their customers. But it also makes you wonder about centralization and control. Will bringing crypto into the traditional financial system eventually lead to it being co-opted by the very institutions it was meant to challenge?
It's the big question, right?
Yeah.
Can crypto become mainstream and still be truly decentralized? Can it keep that rebellious spirit while becoming more widely accepted?
Yeah, these are the tough questions we'll continue to face as the crypto landscape keeps changing. It's an ongoing experiment, a kind of push and pull between different forces. The choices we make today will shape the future of crypto.
It's like we're at a crossroads. One path leads towards integration, but maybe we lose some of that decentralization. The other path sticks to the original vision of a truly decentralized financial system, but maybe at the cost of wider adoption.
It's a fascinating dilemma, and I don't think there's a simple answer. It's a journey of discovery, with both successes and failures along the way. We need to be open to different possibilities while also being aware of the potential risks.
Speaking of risks, let's go back to Serenity and their access card for a minute. The idea of a biometrically secured blockchain card is interesting, but they're not being very transparent about their technology and security, which is a bit of a red flag for me.
I get where you're coming from. It's smart to be skeptical about new technology, especially when it comes to sensitive financial information. Serenity needs to be more open about how their system works, how they deal with potential security problems, and what they're doing to protect user data.
Exactly. And it's not just about security. I'm also wondering if their vision for real-world services is even realistic. The idea of using a blockchain card to prove your identity at a bank or access your medical records sounds convenient, but it seems like there would be so many practical challenges.
You're absolutely right. To build a decentralized network of real-world services, you need a whole ecosystem of partners, a solid infrastructure, and widespread adoption. It's not going to happen overnight. And it's not just about the technology. There are also social and regulatory hurdles to overcome.
Yeah, I see what you mean.
Uh-huh.
Like, let's say you want to use your access card to verify your identity at a bank. First, the bank has to agree to accept this new form of ID. Then, there need to be clear standards and protocols to make sure the data being shared is secure and private.
Exactly. It's a complex challenge that involves collaboration and innovation from different sectors. It's not enough for Serenity to just create a cool gadget. They have to build a whole sustainable ecosystem around it.
And that ecosystem has to be based on trust. People need to feel confident that their data is safe, that the system is reliable, and that their privacy is respected. Otherwise, this whole idea of real-world services could fall apart before it even gets started.
You hit the nail on the head. Trust is essential, especially when it comes to finance and technology. Serenity has to prove that they deserve that trust by being transparent, accountable, and responsive to the concerns of their users.
You know, speaking of transparency, they haven't really explained much about their decentralized physical infrastructure networks. It sounds like an interesting concept, but I'm having a hard time understanding what it actually means.
Yeah, it's a bit of a head scratcher, I'll admit. Based on what little information they've given us, it seems like they're imagining a network where physical assets are connected and managed using blockchain technology.
So instead of having centralized authorities or middlemen to keep track of things like property ownership, supply chains, or even voting systems, those functions would be handled by a decentralized blockchain network. Is that what they're getting at?
That seems to be the idea. It's a bold vision with the potential to disrupt all sorts of industries. Imagine a world where property deeds are permanently recorded on a blockchain, so you don't need title companies and there's less risk of fraud. Or imagine supply chains where you can track products from where they're made to where they end up, ensuring that they're authentic and ethically sourced.
Sounds pretty utopian. But again, I can't help but think about all the practical challenges. Building a decentralized physical infrastructure network that can actually handle all the complex real-world applications, that's a huge undertaking.
Oh, it is. It requires breakthroughs in technology, clear regulations, and maybe most importantly, a fundamental change in how we think about ownership, control, and trust.
It's a total paradigm shift. We're talking about moving from a world built on centralized institutions and hierarchies to a world where power is more distributed and decentralized.
It's a radical idea, and it's not without risks. But it's also an incredibly exciting opportunity to reimagine how our society works and how we interact with each other.
It's a vision that's both inspiring and a little intimidating. And it raises a whole bunch of questions. Who will build these decentralized physical infrastructure networks? How will they be governed? How do we make sure they're secure, transparent, and accountable?
These are questions we need to figure out together. It's not just about technology. It's about our values, our ethics, and our vision for the future.
It just occurred to me that this whole conversation about decentralized physical infrastructure networks relates back to what we were talking about earlier, about the role of individuals in the crypto space.
Ah, I see the connection. You're thinking about how these decentralized networks could give individuals more power, more control over their data, their assets, and how they interact with the world, right?
Right. Imagine a world where individuals have the tools to manage their own digital identities, to store and share their data securely, and to participate in decentralized governance systems. It's a powerful vision of individual empowerment.
It is, and it fits perfectly with the core principles of blockchain technology: decentralization, transparency, and individual control. But we need to be realistic. These decentralized networks aren't going to magically solve all our problems.
Of course not. There will still be challenges, risks, and uncertainties, but that's part of what makes this whole space so dynamic and exciting. It's a journey of exploration, experimentation, and learning.
We're all figuring this out together. It's so important to have open and honest discussions about the potential benefits and risks of these new technologies. We need to be critical thinkers, challenge assumptions, and be willing to adapt as things change.
Well said. And that brings us back to the importance of media literacy and critical thinking in the crypto world. We need to be careful about what we believe, to question the stories we're being told, and to form our own opinions based on facts.
We can't just passively absorb information. We need to actively engage with it, analyze it, and see how it fits into the bigger picture. We need to be aware of our own biases and be open to different perspectives.
It's about finding that balance between healthy skepticism and a sense of wonder, between being realistic and being open to new possibilities.
Yeah, it's about embracing the complexity, acknowledging the uncertainties, and being willing to learn and adapt along the way. It's a journey, not a destination.
Okay, let's shift gears back to the news that got us started on this whole deep dive in the first place.
Yeah.
That strange reaction the market had to positive news about Bitcoin. We've talked about different explanations, maybe large holders manipulating the market, maybe powerful people manipulating the media.
We've also thought about the impact of broader economic and geopolitical trends, as well as the psychological factors that influence how the market behaves. It's complicated, with lots of different forces at play. There's no one answer that explains it all.
Right. It reminds us that the crypto market is still young and prone to big swings. Lots of things can influence it, and some of those are really hard to predict or control.
It's a market driven by both reason and emotion, by fear and greed, by speculation and innovation, by hype and genuine belief in the power of this technology to change the world.
It's a wild ride, that's for sure. You need to be both careful and adventurous. But even with all the ups and downs, there are signs of progress, of growing adoption, and a growing realization that cryptocurrencies could really change the financial landscape.
We're seeing governments, banks, and big companies taking crypto seriously. We're seeing exciting new technologies and applications. And we're seeing a growing community of people who are passionate about building a more decentralized and fair future.
It's an exciting time to be involved in crypto, even with all the uncertainty and challenges. It feels like we're witnessing the start of something brand new, something that could change how we think about money, technology, and society as a whole.
It's a revolution in progress, and we're all part of it, whether we realize it or not. The choices we make, the conversations we have, and the actions we take will shape the future of this movement.
So let's make it a future worth fighting for. A future that embraces the core values of decentralization, transparency, and individual empowerment. A future that uses the power of technology to create a more inclusive, fair, and sustainable world.
A future where everyone has the chance to participate and thrive.
Great point. And on that note, we'll wrap up this part of our deep dive. Join us for the final part, where we'll talk about some key takeaways from this discussion and explore some thought-provoking questions about the future of crypto. Welcome back for the final part of our deep dive. Man, we've covered a lot of ground today, haven't we? From that weird market dip to the government getting into Bitcoin. We even talked about a company trying to connect the digital and physical world using, well, blockchain tech.
It's been quite a ride for sure. We talked about the complexities of the crypto market, the good and the bad of decentralized technologies, and how this whole thing could impact society.
Yeah, a lot to process. But that's what we love about crypto, right? It's
Yeah.
always pushing the limits, making us rethink everything we thought we knew about finance, technology, even what value really means.
And it reminds us that we're not just watching this technological revolution happen, we're part of it. The choices we make, the money we invest, the way we engage, it's all shaping how this thing unfolds.
Absolutely. And that brings me to one of the big takeaways from this deep dive. We have to think critically and make informed decisions in this space. We can't just blindly follow the hype or believe everything we read.
I completely agree. We have to be a little skeptical, question what people are telling us, and really dig deep to understand how these technologies work, what the risks are, and what it all means in the long run.
Remember that theory we discussed from the Blockchain DXB podcast about the media, maybe manipulating how people see Bitcoin? Yeah, it might sound a bit like a conspiracy theory, but it really shows how important it is to be media literate in the crypto world. Who's giving us this information? What's their agenda? What perspectives are they pushing and what are they leaving out?
Yeah, we have to be more careful about the information we consume, look for different perspectives, and think critically about it all. We need to develop our own ways of figuring out what's true and what's not, especially in this decentralized world where things can be so chaotic.
It's about going beyond the headlines, looking at the details and coming to our own conclusions. But it's not just about being skeptical. We also need to be open to new possibilities, challenge what we think we know, and embrace the potential for good that this technology has.
It's about finding that balance, being critical but also curious, being practical but also hopeful. Because crypto needs both. It needs those who question things to keep us grounded and those with big visions to push the limits.
I like that critical thinking and a sense of wonder, a perfect motto for navigating the crypto world. Speaking of navigating, we've talked a lot about the big players, governments, banks, tech companies. But what about us, the everyday people? Where do we fit into all of this?
That's the key question, and I think the crypto community needs to think about that more. If we really believe this technology can level the playing field, we have to make sure everyone can access it and benefit from it, not just the tech experts or the wealthy.
Totally agree. And that might mean looking beyond all the complicated stuff, the wallets, seed phrases, and decentralized networks. We need to find ways to make crypto easy to use, intuitive, and relevant to people who might not care about the technical stuff.
Maybe it's about creating simpler interfaces, explaining things in a way that everyone can understand, or even building new systems that are easy to use without sacrificing security and decentralization.
It's about meeting people where they are, understanding what they need and what worries them, and giving them the power to be part of this new financial world in a way that feels safe, accessible, and helpful.
It's about building bridges, not walls, and making sure everyone benefits from this technology, not just a select few.
As we wrap up, I can't stop thinking about that William Gibson quote. The future is already here, it's just not very evenly distributed.
That's so true, especially when you think about crypto. We're seeing glimpses of what the future could be, but not everyone has equal access, understanding, or benefits.
Exactly. And it's up to us, as individuals and as a community, to work towards a more fair and equitable system, to make sure this technology is used to empower people, not take advantage of them, to bring us together, not divide us.
It's about building a future that we're all proud of, a future that embodies our values of fairness, inclusion, and sustainability.
Well said. And remember, everyone, this deep dive was just our analysis of that Blockchain DXB podcast episode. There's a whole world of information out there for you to explore. Check out those White House documents, those economic reports. See what you think about the Serenity Card.
Don't just take our word for it. Form your own opinions. Get involved in the discussion. Question everything. And keep learning, exploring, and pushing the boundaries of what's possible.
Couldn't have said it better myself. It's been great diving deep with you all today. Until next time.